Greetings, members one and all of the Salivation Nation. Well, we have some news today. A milestone has been hit. The gold to silver ratio has hit a 25-year high. With gold recovering somewhat due to the dollar kind of losing steam, but silver is underperforming. This comes to us from Kitco News. The gold to silver ratio has risen to its highest level in roughly a quarter century, with silver suffering from both weakness in precious metals lately, but also dragged down by pessimism about base metals. The silver price has been very weak in recent days in both absolute and relative terms. The gold to silver ratio has risen to 86, its highest level in 25 years, said a research note from analysts at Commerce Bank. The ratio measures how many ounces of silver it takes to buy an ounce of gold. Now, as we know, that is just in raw terms, in relation to spot price, if you're going to make that even trade. When you actually take your silver into a local coin shop or a dealer or what have you, they are going to take less. You got to keep in mind premiums, and what you pay for it may not be what you sell it for if the price stays the same. And even if the price goes up, it may take quite a while before you to regain those matters. So this is just purely hypothetical in terms of this ratio. In practicality, it may not work out the way that most of us think it should. The ratio, so when the number is rising, reflects that silver is underperforming relative to gold. Based on the COMEX December futures contracts for gold and silver, the ratio stood at 85.88 around 10 a.m. Eastern. Bart Malik, head of commodity strategy with TD Securities, pointed out that silver historically tends to be more volatile than gold. And that's true. I've mentioned that on my channel many times as well. Gold has been on the defensive over the past week and giving back its gains from October, so silver fell more disproportionately. COMEX December silver on Tuesday bottomed at $13.92, and as you see right now it's at $13.99. That means I'm in big trouble based off of a bet that I made or was made. The contract's weakest level since 2016. December gold fell as far as $1201.40. That's $1,201.40, a level not seen since October the 11th. Volatility is a short-term story, Malik said, and explained the rise in the gold to silver ratio. Silver is underperforming because it is an industrial and precious metal, or a monetary asset, and that's right. It has a duality here as an industrial metal as well as a precious metal, which means that it is a monetary asset. Analysts have blamed the weakness in precious metals on a resurgence of U.S. dollar strength, with the spot dollar index hitting its highest level since the middle of 2017. The greenback was boosted last week when the Federal Open Market Committee signaled that it will continue increasing U.S. interest rates. Further, the euro has been undercut against the greenback by European politics, in particular with Italian officials wanting a higher ratio of the budget deficit to gross domestic product than allowed by European Union rules. However, observers said silver's slide has also been impacted by spillover weakness in industrial base metals such as copper. COMEX December copper lost more than 60 cents a pound since its summer peak. Historically, slightly more than half of silver demand has been for industrial use. And we talked about kind of how that can come into play in a prior video. Whereas, we might need, as precious metals buyers, we may want to pay attention to the copper price just as much as the gold price in order to make a determination of the silver price, or to make sense of it anyway. The ratio between silver and gold continues to widen, with silver falling to the cheapest in a quarter century as slowing economic growth clouds the outlook for metals with industrial uses, said commodities brokerage SP Angel. Spot silver tumbled 17% this year, close to an almost 3-year low, while gold's year-to-date fall records less than 8% after turmoil in world equity markets supported safe haven investing in October. And that is one argument for gold. It is less volatile which means that you're going to be able to preserve your wealth much more on a consistent basis than you will with silver. Silver is still a wealth preservation tool. However, because of its growing industrial use, you are going to see it more volatile and act more as a commodity in these times. Further, Malik explained, weakness in emerging market currencies hurts silver demand since this makes the metal more expensive than local currencies. This is another factor hurting demand in China, which uses much silver in the manufacturing of electronics goods, Malik explained. We've been seeing that in India as well, Malik added. Analysts look for silver to fare better down the road, with some suggesting the metal might be oversold already. Silver is facing headwind from two different directions at once. Firstly, from gold, and secondly, from base metals. That's right. Commerce Bank said, we believe the price slide is excessive nonetheless. In our opinion, the current price levels provides an attractive opportunity to hedge against rising prices. Now, keep in mind where this source is coming from and any kind of advice that you would seek based off of what a bank says or somebody who has got a vested interest in precious metals. TDS sees the picture improving for silver and other precious metals, although this may not happen until 2019. For starters, industrial demand is seen improving. We see it unlikely the Fed will continue rate hikes, which should help precious metals generally, although they've already mentioned that they're going to do it 3 times next year and 1 time in December. So this year we'll see a rate hike, which means that it's likely we will see gold and silver decline maybe a bit more, but not by much. Really, though, I'm surprised we're seeing the prices this low. You know, with silver now below $14 as of the recording of this video, and gold right at that $1,200 mark. I thought we would see them stay level or go up a little bit. But again, as I mentioned in prior videos and on record, my predictions for the end of the year are almost impossible to happen at this point. It would take literally a black swan event for them to go up that much before the end of the year. But, you know, this 25-year high is just that for gold and silver ratio. There has been times where the ratio has been higher. If we look at this macro trends chart, which looks back at 100 years. You've seen me reference these charts in the past with regards to silver and gold prices. And these charts on this website, I believe, are some of the biggest arguments why you and I accumulate silver and gold. But we look here, we can see that the silver to gold ratio over the years has certainly seen quite a volatility. Back when the prices were set, you know, we saw the silver and gold ratio in 1940 and 41 at 97.31 ounces of silver to buy 1 ounce of gold. After the markets were not set and the natural markets took over, at least to a point, we've seen it, you know, hover in various different levels here. And in the 80s, we saw it go way down to almost the natural ratio, or to the fixed ratio there, price ratio of 18 to 1 or 15 to 1 here in December of 1979. And then we've seen it go as high here to 97, I believe is what that was. If I can hover my mouse the right way there. Here we go, 99.47. So very interesting indeed. It's the gold to silver ratio has some way to move back, and we'll see how it plays out. I believe it is unusually high at this point. I believe it should be lower, but what would that average be? You know, is it going to be somewhere around 60 to 1? Is it going to be somewhere around 50 to 40 to 1? You know, as we can see an average here throughout, the ratio does seem to widen to a point. Let's see here. I don't know. Let's go back here and see what the last 20 years has for it and what the average would be. Maybe the average is going to be somewhere around 60 to 1 is maybe where it should be. But as you can see, it's kind of been increasing over time, except for when there's real big spikes. You know, in 2011, it never got below 30 to 1. So my guess is The days of 30, 40 to 1 are probably past us for quite some time. As under other normal circumstances, it never really got much below 40, 45 to 1. So I think that would be a pipe dream to get back to that point, which means that probably 60 to 1 or 71 might be a better way to go. And if you want to hedge your bets on the silver to gold ratio, the best way probably to do that would be in the paper markets, in the futures markets, and ETFs, and where you can trade the ratio in that regards. But nonetheless, post your thoughts below. Quite interesting. Another high, 25-year high milestone with silver and the gold to silver ratio. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.